Well, let's welcome on board Saumil Mehta and try and understand and carry on that conversation we had from earlier. We'll try and reconnect with him in just a while from now. But we also have Mr. Jayesh Mehta, DSP Finance of DSP Finance, joining us on the show. And Mr. Mehta, hi, morning. First up, of course, the straight question that everybody has: your first take on this tariff announcement and the kind of impact that you think it could create to the economy back home.
Hi, good morning. Thanks. I think market has kind of, because if I look at very narrowly, you guys cover equity pretty well, but if I look at very narrowly the FX market and the rate market, right? Of course, there's no impact on the rate side. On the FX side, very surprisingly, market has turned out very resilient, right? Even when he said, I would say day before was a very weak market, but I think it got covered very well. And when he said within 24 hours, when he said day before evening that, they will be raising more tariff. Yesterday market was kind of very manageable and kind of little bit rupee appreciated a little bit. And when at 6:30, when he put additional 25% duty, I think the apprehension was that it will definitely break 88, but it looks very strong resistance there. So even today's open, it's like 87, 72, 73. I think there is a huge resistance at 88. Of course, couple of factors. Market has been, kind of prepared for it. That's one. Secondly, also, because it's 21 days, people are taking it that, a lot of things can change by 21 days. Because I think after seeing that 135% of China coming to, standstill, people are hopeful that this 50 will change dramatically in 21 days.
Mr. Mehta, I also want to understand your perspective on the outlook for the rupee other than the levels, given that we have this tariff number on us. Do you think the export pressure that could build in on our economy could put some depreciation pressure on the rupee going ahead?
Not really, because see, if you really look at it, if not US, there would be some other alternative. But more importantly, I think currently our currency is more, on a day-to-day, it's more dependent on the FPI flows, right? And which, of course, has been negative since last 1.5 months. Any change there, right, could definitely change the situation. So if the FPI flows keep on continuing to be negative, this impact on US export, net export, it's, if you kind of put it to a number like, big figure because of the exemptions for certain items, it will be something like maybe $5-7 billion or so, right? But FPI outflow, that is something very important for us. If that continues, then we will have weaker currency. But if that can change, if it's so much of sell-off on the equity side, if that changes, the outlook would definitely change. I think all FX guys are looking at equity market and they look at the daily FPI net numbers, sell or purchase very, very diligently than the export numbers.
All right, Mr. Mehta, with this we'll let you go. Would really appreciate you taking the time out and talking to us this morning. But yes, that's